You open your bank account on the second Wednesday of the month, and the deposit is there. Same number it has always been. Same day it always arrives. And somewhere in the back of your mind is a question you have never said out loud. Is this actually the right amount? You do not know how to verify it. You have tried calling and waited 2 hours for an agent, who gave you a different answer than the one you got 6 months ago. You have Googled it and found 17 contradictory articles. So you have done what most people do, let it go. Assumed the system has it right, and moved on. That quiet suspicion deserves more than that. In March 2026, the Social Security Administration's own Inspector General released an audit, not a news story, an official federal audit. It found that 367 widows and widowers had been underpaid not because they filed at the wrong time, not because they made an error on a form, but because of an internal SSA calculation mistake. Average loss per person, $21,200. The SSA did not send letters, did not make calls, did not fix it automatically. The people who recovered that money found out because they asked the right question at the right moment. The ones who never asked are still being underpaid today. By the end of this video, you will know whether your birth year puts you in a group with an active money problem right now. What 3 free steps can check or fix your situation starting today? And 1 specific form number that has saved people hundreds of dollars per month on their Medicare bill? I am also going to tell you about Sandra, 71 years old. Pennsylvania. She called the SSA to ask about her cost of living increase. What she found during that call cost her nothing. What she had already lost before making it was $40,000. $320 money she had earned and was owed and never knew was missing. Quick context before we go further. This video is made for you, retirees and pre-retirees, anyone collecting Social Security or approaching that decision, and anyone who has lost a spouse and may be affected by survivor benefit rules. The goal is one thing: help you find out whether your current monthly amount is correct and give you the exact steps to check or appeal it at no cost. Everything I cover comes from publicly available official sources, the Social Security Administration's own website at SSA, SRGO, the March 2026 SSA Office of Inspector General report, and the 2026 IRMAA Appeal Guidance published by Kiplinger, which draws directly from Medicare Gov's official premium tables. I will name the source as we go. This is educational content only, not personalized financial, tax, or legal advice. Before making any major claiming decision, talk to a licensed professional who knows your specific numbers. Stay to the end, the last. Group I cover has an option almost nobody asks for, and it can mean a lump sum of up to $12,000 with your very first check. And the reason almost nobody asks for it: there are 4 groups. Your birth year determines which one applies to you. We are not going in order from oldest to youngest. I am starting with the group carrying the most confusion, right now in 2026. The year the full retirement age transition schedule completely finished, and most people in this band have never once known their specific number until today. Group 2, born between 1955 and 1959. Per sa in Gov. Here is the full retirement age breakdown. If you were born in 1955, your full retirement age is 66 years and 2 months. Born in 1956, it is 66 and 4 months. Born in 1957, 66 and 6 months. Born in 1958, 66 and 8 months. Born in 1959, 66 and 10 months. Pause this and write down your exact birth month and year. Every reduction calculation is based on your specific month, not the round number you assumed. Here is what the difference looks like in real dollars. If you were born in 1957, full retirement age, 66 and 6 months, and you claimed at 62. Your benefit was reduced by approximately 8% permanently. On a $2,000 monthly benefit, that is $516 less every single month for the rest of your life. Over 20 years. That is $123,000. The SSA does not ask you of this before you claim. They process the application, ask if you understand your benefit will be reduced. You say yes, and that reduced amount becomes your number locked. Permanent. If you are in this group and have not yet claimed, every month you delay past your full base, retirement age earns you 0.2% more. Permanently. That compounds to roughly 8% per year. Between your FRA and age 70, you can accumulate 24 to 32% more per month for life. On a $2,000 benefit, that is potentially $640 more every single month forever. For those in dollars, this group currently working and collecting before FRA per the Street's April 2026 analysis, citing the SSA directly. The 2026 earnings test threshold is $24,480 per year. SSA withholds $1 for every 2 you earn above that limit. The money is not gone, it gets credited back when you reach full retirement age. But if you did not know it was being withheld, your check looks like it simply stopped. There is a group in this video born 1943 to 1954 where the SSA's own federal auditors confirmed a systematic error, not a rumor, a documented federal audit. We are going to get there. But first, Group 4, born in 1966 or later. You are 59 or younger. You may be tempted to skip ahead. Do not. What applies to your group has a legal time window attached. And most people in your group do not know the clock is already running. Your full retirement age is 67. Claiming at 62 means a 30% permanent reduction. Waiting until 70 adds up to 24% more than your full benefit. Permanently. Those numbers are already decided. What is not decided yet is whether your earnings record is correct. According to SSA.gov's own frequently asked questions on earnings corrections, you ordinarily have only 3 years, 3 months. In 15 days from the end of the taxable year, your wages were paid to correct that year's entry. Exceptions exist for employer omissions and processing errors, but the window is real and it closes on the oldest years every single year you do not check. The SSA has been recording your payroll since your very first job. That data came from your employers. According to SSA's own records, $1.2 trillion in wages sit in the earnings suspense file, wages that could not be matched to a specific person's record because of submission errors during the manual payroll era of the 1980s and 1990s. Each uncorrected year costs you approximately $100 per month in retirement. Permanently. 3 missing years from that era equals $300 less every month. $72,000 over a 20-year retirement. From money you earned, paid taxes on, and never once collected. Go to SSA.gov right now or pause this and write it down. Create your My Social Security account if you do not have one yet. Open your Social Security statement. Compare every year. List it against any records you have, W-2 forms, old tax returns, pay stubs. If something does not match, call SSA at 1-800-772-1213 and request a correction of earnings record with supporting documentation. The fix is free. And the paperwork gets harder to locate every year. Now Sandra, she is 71 and lives in Pennsylvania. Her husband Dennis worked in manufacturing for 35 years and passed away in 2019 at 67. Sandra had her own Social Security record $1,840 per month. Nobody at SSA ever told her she might qualify for more on Dennis's record. She assumed her check was correct, and easy assumption to make, because the SSA does not compare the two numbers for you automatically. They never have. 2 years ago, Sandra called SSA not about survivor benefits, but about a cost of living adjustment question. The agent she happened to reach mentioned, almost in passing, that she might want to ask about switching to Dennis's record. Dennis's benefit had been $2,680 a month. Sandra qualified for 100% of it at her full retirement age, and she was already past FRA when she made the call. The switch added $840 per month. She had been leaving $840 on the table every month for 4 years. That is $40,000. $320 recovered from a call she made for Day. A completely different reason. Sandra did nothing wrong. She just did not know to ask the question. And the SSA not once, in all those years, ever asked it for her. Has your Medicare premium ever gone up and nobody explained why? Drop a comment below. You might be overpaying right now and have no idea there is a form that can fix it. Group 1. Born between 1,943 and 1,954. You have been on Social Security for years. Your full retirement age was 66. And most people in this group assume there is nothing left to check. That assumption is costing some of you real money every single month. First, are you on the right benefit record? The March 2026 SSA Office of Inspector General audit confirmed that 367 widows and widowers had been underpaid through an internal SSA calculation error, affecting how a deceased worker's earnings were adjusted for benefit calculations. Average loss, $21,200 per person. The SSA did not proactively contact those affected. The audit identified cases requiring manual processing as most vulnerable. If you lost a spouse and have not specifically asked SSA to compare both options and place you on the higher one, there is a real chance you have been on the wrong amount for years. Write this down: 1-800-772-1213. When they answer, say exactly this: I want you to pull both my retirement benefit and my survivor benefit and compare them. I want to be sure I am on the higher one. That question costs nothing, takes 3 minutes, and nobody will ask it for you. The second issue for this group is IRMAA, Medicare's income-related surcharge. According to Kiplinger's 2026 IRMA Appeal Guide, drawing from Medicare.gov's official premium tables. The PACE standard Part B premium in 2026 is $202.90 per month. IRMA surcharges begin at $109,000 in modified adjusted gross income for single filers and $218,000 for joint filers. The surcharge adds between $95 and $487 per month on top of the standard premium per person, and Medicare uses your income from 2 years ago. If you had a one-time spike in 2024, a Roth conversion, a property sale, a large IRA withdrawal, you may be paying an elevated surcharge right now based on income you are no longer earning. Form SSA 44, write that down. SSA-424 exists specifically for life-changing events that reduced your income. Mail it, fax it, or bring it to your local SSA office, if approved. The surcharge drops and overpayments may be refunded retroactively. Now, the last group, and I told you at the start, there is an option here almost nobody requests. Group 3, born between 1,960 and 1,965. The most consequential decisions in this entire video are being made right now by people in this group, not in the past. Not theoretically today. Full retirement age for everyone in this range is exactly 67. The two numbers that matter most for your situation right now are 30% and $12,000. 30%, that is the permanent reduction if you claim at 62 with a full retirement. age of 67. On a $2,000 monthly benefit, that is $600 less per month for life. Over a 20-year retirement, that is $144,000 in cumulative losses compared to waiting until 67. Per AARP's research, only 13% of Americans can correctly identify their own full retirement age. The SSA processes an early claim without warning you in plain terms. They ask if you understand your benefit will be reduced. You say yes. That reduced number is permanent for the rest of your life, $12,000. Per SSA's own rules, if you apply after reaching your full retirement, age of 67, you can request up to 6 months of retroactive payments. SSA pays you as if you had filed 6 months earlier. On a $2,000 to $1,000 monthly benefit, that is a lump sum of up to $12,000. With your very first check, pause and write it down. The trade-off is a slightly lower ongoing monthly benefit because your start date moves back 6 months. But the option exists per SSA. Gov. And the reason almost nobody collects it is the same reason almost nobody started this video, knowing their correct full retirement age. Nobody told them. That is the entire problem. That is the entire point of this video. Every group today shares one reality. The money is real. The steps to find it cost nothing, and the SSA will not volunteer them. The 367 widows in that federal audit did not get a call. Sandra did not get a call. The question, am I on the right benefit at the right amount, takes 3 minutes to ask. The cost of never asking can reach tens of thousands of dollars. Tell me in the comments which group you are in. Group 1, R, Sen, or Fire. I read every one. Here is what to do by group. Group 3, born 1960 to 1965, a 30% permanent reduction is exactly what it says. And the retroactive 6-month lump sum option exists if you are claiming after your FRA of 67, ask for it specifically. Group 1, born 1943 to 1954, call 1-800-772-1213. Ask SSA to compare your retirement benefit and your survivor benefit. And ask about Form SSA, 44 if your Medicare bill exceeds $202.90 per month. Group 4, born 1966 or later, open your Social Security statement at ssa.gov today and check every year's listed earnings, each uncorrected. Error costs approximately $100 per month in retirement. Permanently. Group 2, born 1955 to 1959, know your exact FRA to the month 66 and 2. Si, Leo, Ba, or 10 months. And know that anything withheld under the earnings test gets credited back at full retirement age. 3 things before you go. Subscribe if you have. Not every year these numbers change, and the SSA will not send you a letter when they do. Take one free action from this video today. Open your statement at ssa.gov. Call 1-800-772-1213 for a survivor benefit comparison. Or download Form SSA 44 from ssa.gov if your Medicare premium is too high and income dropped since 2024. Pick one, do it today, and send this to someone you know who is widowed and on Social Security. Because the only reason Sandra's $40,000 does not happen to the next person is because someone who watched something like this picked up the phone. The next video covers the earnings test, what it withholds when it returns, and the rule that blindsides people who discover it only when their check stops. It is right here